Okay, hey everyone. This is a behind the scenes peek of the charts from today's live session with Bill Smith. Hope you enjoy.
We are going to go straight to the charts to start, which is where we were before. Having another big, kind of big green bar today. The market's up about another percent. Couple interesting things happening. I don't know if they mean anything. It's always hard to know. But one of the things I know that there's a lot of people watching, I think the market, people who are in the market are trying to determine, have we put in a bottom for this bear market? We have, if I back out here from the bottom to the top of this market, it's dropped about 24%. We're not down that much now because we've had a little bit of a rally here. So as of right now, we're down from the high about 16%. So, we've had a decent bear market, and I think the market's trying to determine, hey, are we near the end? Is this here the bottom, or do we have more to go? Nobody knows, and I certainly don't know, but there's a few things I know that technical analysts, people who look at charts like this, are watching. So one of them is this line right here, which is, it's a 200-day simple moving average is all it is. I have it coded up in mine so that it turns green when it's sloping up and it turns red when it's sloping down. But that's really all that is. It's not anything fancy. But the reason I leave it on my chart is because the market pays attention to the 200-day moving average. And let me show you why. I'm gonna make sure I've got a few years on here. If we back up, you'll see that when we're above, like let's just take this stretch right here. Once we crossed above the 200-day moving average, you can see we had a pretty nice rally, and this rally is a couple of years long. So this is from sort of May of 2020 to January of 2022. So I guess a year and a half plus long. You can see right here, this is COVID. But once we pass below the 200-day moving average, you can see that was a pretty reasonable signal that we were heading down. And it's a simple thing, but since the beginning of time, people do pay attention to it. It's sort of if I go back, let me go back before COVID, you'll see the same thing, along this line and then here. And the other thing that's interesting about it is it doesn't cross over very often. I mean, what I'm showing you is, years and years of data, and it will be, several years or months above. And the way, by the way, sometimes you see it peaking below, but the way most people read these is, this, first of all, this never closed below the 200-day moving average. So that would sort of be something they wouldn't pay attention to. But if it did, what a lot of people do is they say, well, if it closes below the 200-day moving average, that's going to be a setup bar or a, kind of a bar to get me sort of locked and loaded, but I'm not going to pull the trigger until we take out the low of that day. So if I find an example here, well, here's an example. So here we closed above, here we closed below. But I never would go into bearish mode because we didn't take out the low of this day. The next day back up, the next day back up, and we kind of rallied from there. And the same thing you have with this one here. So in this case, we dipped below a little bit, but we would have never, if we were using this as kind of a system, which I don't think is a very good system. I just think it's a good sort of general market monitor. But a lot of people will use that kind of a setup bar, and usually in conjunction with something else. But all that to say, if just big picture, the 200-day moving average is kind of an important thing. You know, when you don't, we don't go below it very often. And when we do, it's usually bad news. Well, back to the current time, here we are below it. But as you can see, we're heading towards it. We're getting, you know, within maybe just, I mean, who knows, could be within a few days or maybe a couple weeks or a few weeks of crossing back over. And so I think that's one of the things that has people watching, you know, are we there or not? Another thing is there's a channel. Let me get a channel drawing tool up here. There's this channel that I think a lot of people have been watching. If I look at it kind of here, so what I'm doing is I connected these tops, you know, there, and I just kind of drew a straight line, and then I'm going to see down here, I'm going to connect the bottoms. You can see that the bottom we touched here, we touched here, we touched here, and the tops we touched here, we touched here, we touched here. Well, basically there's this channel that's been forming that between, you know, channels, just two parallel lines. But you often see this, and when we break through like this, we break out of the channel. You know, that tends to be a bullish sign if we break to the upside, or a bearish sign if we break to the downside. So that's another, you know, another kind of thing that I think I've seen a few market analysts point this one out. I personally, I watch this stuff, I'm interested, but I don't use that as my trade signal. I think, as you know, I really pay attention to the EWS signal, which is more based on market internals. And I think it's for me has been much more reliable. And for our kind of trading, like if you're trading the Monarch, we don't get really bullish or bearish. We just stay pretty neutral. We're making our money. Remember, we're making our money from time decay. We're not making our money because we picked the right direction. In fact, we want direction to not hurt us. So anyway, we might be near a bottom, which might be interesting, but we don't know. What we do know is we have had a couple of green bars here, which means we're basically trading according to the standard rules that we have for the Monarch 4.